Hey traders, welcome to Charts and Coffee. Hope everyone's having a great morning. We have a very busy week, not of data and not as much compared to last week in terms of earnings. We have a lot of FOMC speak, a lot of appearances from the FOMC that started with Jerome Powell on Sunday on 60 Minutes, where publicly and rather plain spoken, Jerome showed up and basically said, inflation is going in the right direction. We're going to cut rates, but we don't know if we're going to start in March. Well, Fed Fund futures have been pointing at that for a very long time, and now we're pretty certain that we've got to wait for May before the cuts come. And that's exactly what Fed Fund futures and target rate probabilities, the data, have been saying. So we got confirmation of something that we knew, and then now we get to move on from that, right? But the market didn't really take it. I say the market, treasuries, currencies, gold, the indices, they didn't take very kindly to what was about as close to the Federal Reserve painting themselves into a corner as we're likely to see. I mean, they're never going to say never, and they're not going to say always, and they're not going to project with 100% clarity what they're going to do. However, it makes sense that there might be a pause. Okay, let's talk about what a pause is, and let's talk about probabilities. Okay, this is, I don't know why this is. And, look, I'm just going to share with you with hopefully some data as to why this is. But there's two ways to look at any trend. In this case, the uptrend in the S&P. Nothing, and I love, Henry says this a lot, and this is a great old trading truism. And I love that he says it because it reminds me that some of these old trading truisms, still resonate with us, right? And that is, nothing is more, and I might be paraphrasing it, but nothing is more bullish than highs, all-time highs, right? But what happens is, what if you're not already long? What if you're an analyst or someone on television who's not already long? What do you have to say to sound relevant, to sound like you've got a plan? You got to say, well, this looks kind of toppy. This looks extended, right? The only folks that are saying that are folks who are not already long. I have to look in the mirror every now and then and say, Rob, do you think this is toppy, or is this just a trend doing what trends do, punching up to higher highs and higher lows? Be very, very careful trying to pick tops, right? Pick tops in uptrends. Will there be pullbacks? Absolutely. Let's go back to this bigger view here, right? In October, the S&P, let me grab my drawing tools here. In October of last year, the S&P climbed back above the 200 propulsion. All right. That's another way of looking at a moving average cross of the 8 exponential and the 200. By the way, all those traders that we literally worship from the 80s and 90s, you know what one of their main basic scans is something above the 200 period. Back then, it was mostly simple. Recency bias is alive and well, and the 200 exponential is probably a better gauge, a better moving average. All right. But whether it's simple or exponential, that's not going to make the difference. Just put that 200 on your chart. Once we get above it, please just have a bullish directional bias. Does that sound simple? Yes. The brain loves to complicate stuff, right? Every one of these little moves to the downside, for some traders, that's a trade. And that's okay. But please note, that's what the move has been and is doing. I'm starting off today's Charts and Copy with a PSA, because please stop picking tops in uptrends, right? If you're willing to pick a top in an uptrend, then please know you should be picking a bottom or a retracement in the uptrend as well, right? If you're looking for those zigs and zags along the way, if you want to play Pong, remember that game, Pong? Great. But play Pong both ways. And please play Pong in the direction of the movement. Physics 101 applies, right? A body in motion. All right. Well, price action emotion tends to do that as well. We survived the magnificent 5 of 7 last week. We survived the FOMC. We survived 60 minutes. I'm sure there's some bearish claim to be made out there, but I'm just going to say it plainly. It's been wrong. It's been wrong for weeks, if not months, if not the better part of the year. So how about we just flip that narrative and say, gosh, weakness in an uptrend or weakness in a bullish environment is a sale. I say this not because I want you to believe me. I'll be very frank. I don't care if you do. All I'm trying to tell you is this is what's working. And we're going to be releasing what we did in January to show you this is what's been working. It breaks my heart when I hear folks in the chat or I see emails, people saying, gosh, Rag, I just found you and you've been bullish for how long? So it just kills me because I am rooting for retail traders. I don't give a rip about hedgies. I don't care about professional traders. I don't worship those people. I don't care about what they do. They play a very different game than us, right? We are retail traders managing and trading our own money, right? No one's coming to bail us out when we make a bad GameStop play, right? Who's been watching all the myriad of GameStop documentaries out there? Very interesting stuff. I caught one over the weekend on Netflix. It's an older one. It followed, I don't know, 5 or 6 day traders. One quit. The other one is in all sorts of hot water. It was a very interesting documentary. And what was it called? The New Americans or something like that? Something like that on Netflix. Salty Raghee. Yeah, Larry, I'll tell you what, and I'm really hopefully not being salty. It just blows my mind that in an environment that we continue to make higher highs, folks just aren't getting long on the dips. It literally hurts me. It hurts my head. It hurts my heart. It literally hurts. Now, where are we not getting clarity? We're going to talk a lot more about this in Top Tier Outlook. Where are we not getting clarity? We don't have complete clarity in bonds yet. And why would they be clear? Because Jerome just came out and said, nope, to March. And so bonds had to respond in kind by saying, okay, we're not ready to keep moving higher, which reflects lower yields. All right, we got a question in our essentials room. Steve asked, what is the Fed Watch tool based on? Actual positions in the bond market or something else? So Steve, I know that Lorna Bot helped you out there, but let me also answer for all the folks listening in on my Twitter, YouTube, and the Simpler Trading YouTube channel. It is based on Fed fund futures. So it's an actual position as opposed to people running their mouths off on television. Isn't it funny how they're all in the uptrends, but they're all in cash when the markets move lower? Guess they're geniuses. Yeah, so the rest of us mere mortals, right? We have to rely on data. So they're actual positions, which is really all I care about. People who trade the Fed fund futures, which admittedly is not a huge market, but at least it's people putting their money where their ideas are. And so when you look at the month to month contract dates of Fed fund futures and where that's trading, the CME, which is where the Fed fund futures trade, has this amazing Fed Watch tool. It is the best way to decode macro. Frankly, anything aside from that is noise, to be quite frank. And it just distills it beautifully for you. So Fed Watch is based on Fed fund futures. And they've got a far more in-depth explainer on what that data does if you want to go down the rabbit hole over at that CME Fed Watch. All right. Some of you are saying, Rog, where do we find it? Go to the all-knowing, all-seeing Google, type in Fed Watch, CME Fed Watch, and it'll be the first hit you get on Google. All right. So moving on to George S. Raghee has, George S., I'm a retail trader, right? That's what that's what I do. That's what I have been for my entire career. So I'm rooting for other people like me, right? So yeah, I sure hope so. All right. David Sharp says, I bought Microsoft in my IRA at 300. Nice. When a stock hits all-time highs, how do you determine a good level to take profit? So, David, I have an unusual way of looking at what I want to do with my long-term holding. So I'm just going to presume IRA, longer term. First of all, if on the weekly time frame, and that's going to be my longer-term time frame, for those of you that are saying, Rog, do you buy stocks? Absolutely. We've been doing that since mid-2022 in the Sector Secrets Mastery. I alert out, hey, I'm buying shares of XLK. I'm buying shares of Johnson. So we've been alerting that out. We probably have about well over a dozen alerts at this point since then. Super active style, no, but I do teach you how to trade options and futures, but we also have a longer term portfolio. And so that usually is a weekly thing, David. The way that I teach that in Sector Secrets is a little unusual. If we're at all-time highs, I'm certainly not bearish. The way that I teach that is, when do I look to take profit or start to take profit or close out the position? David, I know it's going to sound odd, but when do you need the money? I'm not investing for the year 21, 24, right? I'm investing either for, I mean, let's think about common things, whether it's a down payment for a home, whether it's college tuition, whether maybe it's a new car, maybe it's a vacation, maybe it's retirement, right? We do have a date. And I don't know when investments became for forever, right? We do have a date at which we would like to access the cash. Hopefully they're profits. So I look at my timeline. I've got sums of money that are dedicated only to certain, call it a project. I like to call them project blank. That, in my mind, that's why I like to look at it. So I know exactly the timeline and the end goal, right? So I have a college tuition fund. That was a short time frame. It was, at the time, maybe 7 years. I have a retirement, right? I'm going to be 53 this year. I got a ways to go, right? So knowing the date at which I want the money is going to dictate the aggressiveness with which I'm willing to take trades. So I don't determine a good profit. I try not to do that, David. I try to determine where the trade may no longer be valid. I try to determine those kinds of things. I mean, if you want to take a profit, then clearly you can do so when it's climbing higher. I wouldn't get flat, though. I wouldn't get flat. So, and I would do that mostly on a weekly time frame. Okay. My Sector Secrets Mastery folks, on the 23rd of January, we did a complete breakdown of every single position we've alerted and taken in the mastery. So if you want to know what that portfolio looks like, how it was constructed, what it consists of right now, check out that replay. And those of you that might just be getting ready to join the Sector Secrets Mastery, you can check that replay out as well, and I'll give you a full breakdown of how I look at longer term and how I actually alert these things out, right? No sense in me doing something where everyone can't see what it is I'm doing and why, right? Transparency. I'm happy to trade in a fishbowl. All right, next up is Stonecastle asks, do I see it right that buying the dip means buying an option in the area of the hourly price movement range or the daily price movement range with a limit order and a 25% stop loss without waiting for a confirmation that price really has turned at this point? Yes. Pretty good synopsis. The key of all of that is, there's 3 keys there. Very good Cliff Notes version. One is, if you're going to buy the dip, we need to be either in the bearish hemisphere, bullish, wrong animal, bullish hemisphere, bullish environment, or just in an uptrend. So buy the dip does require one of those definitions of expecting higher follow through. The other part is the zone. So those hourly price movement ranges are not really for swings. Those are for day trades. But again, the same thing is going to apply to a 5-minute chart. Am I in the bullish hemisphere? Am I in a uptrend, a bullish trend? All right. The other thing is, yes, I don't wait for a candle to close. I think that absolutely makes no sense. There's a price at which I am willing to take profit, enter. I don't need the candle to close. And if it's a long-term candle, that thing could close anywhere. So I like to have a very specific price, not waiting for a candle to close. And so that's the other part of it too. So my confirmation is price. My confirmation could be the myriad of tools that I use to confirm the structure, to confirm something is overbought, oversold, to confirm something is at support, etc. So yeah, that's a pretty good synopsis. The key again is, what are you trading, right? The watch list. What you trade is more important than how you trade it. The key is having the updated hourly price movement ranges and daily price movement ranges that reflect the current historical volatility. It's not a one and done thing, because volatility is always contracting and expanding. Now, taking the data in that way is very different than curve fitting, right? Curve fitting is looking at an indicator, let's say a slow stochastic, and deciding that the 21.3 is no longer good. But if I back test the last six months, if I used a 27.9, it would have been better, right? That's disingenuous. That's only looking backwards and saying, oh, that's what happened then. Cool. That's what's going to happen going forward. Not so. So be careful messing with the settings of your indicators. I'm not changing the settings of the hourly price movement range or the daily price movement range. The actual calculation is identical. So what we do is say, hey, when Jerome comes out and rocks the market, volatility expanded. We have to factor that into the historical look back. So having the updated hourly price movement ranges and daily price movement ranges makes all the difference. And we update these things about every 2 to 3 weeks. In fact, I think we have another update coming up. Yeah, I think we have another update coming up to account for some of the volatility that we've seen as of late. All right, next up is it better to buy an ETF Bitcoin or on an exchange? Depends on what you want, Panther. I really can't answer that. I don't have any Bitcoin ETF, but I do have Bitcoin. So they're two different things in that regard. I really don't have an answer for you. Ask yourself what it is that you want. If you're looking at a Bitcoin ETF, they're holding Bitcoin. I just assume own the Bitcoin, to be quite frank. All right. Did we change the anchor on the VWAP? We did. Yes. Sadiq, whether that be V-score or the anchored VWAP on the daily time frame. Yes, we have absolutely updated that. You bet. You bet. All right. Next up, IWM short. TD, of anything that is wobbly, I would say IWM is, going back to Russell Futures, is probably the most wobbly. If I'm going to play the short side, which I'm not convinced of, by the way, but we could because it is choppy. There's no trend here. Yes. So I'd have to wait till about 1969 to do that. And if I want to buy, I'm open to that too. In fact, I'd rather be a buyer, TD, and that would be around 1915 and a half. Right. So notice how I'm looking at the gold zone of the hourly price movement range and the daily price movement range and the gray zone. And that's automating the zones from which I will enter. The cool thing about the automation is nothing I have to calculate, no bias on my part. I'm just seeing what it is. And then I can place alerts to let me know, because I don't have to stare at this, right? I can place alerts to let me know when I'm closing in on that level at which we might want to buy RTY, micro or mini. We might want to buy IWM calls. And the same goes for the short side. All right, what am I seeing on the SMH? Never have thoughts, only trade what I see. SMH, it's bullish. All right, next up, let's see. TH says this market liquidity is once in a lifetime. You know, TH, I love the optimism, number one. But number two, we're going to have trends throughout our life. Yeah, we're going to have trends to take advantage of. I never want to make it sound as if this is just the most unbelievable opportunity ever. This is going to be a great opportunity. Not even gonna. It is. It has been a really good bullish opportunity. It just seems to be every time there's 2 down days in a row, the bears come out of the woodwork and tell you that this is the beginning of the end. They've been wrong for 14 months. They might have brief periods of looking right-ish, but generally speaking, when you look at the trajectory from the lower left corner of the chart to the upper right corner, right, the trend says it all. And I do agree. I mean, this is a great opportunity at the moment. LRCX, it's one of the great, Rob, it's one of the great trends in the SMH, kind of following along with that semiconductor look. And do we want to buy dips? There are a number of things we can buy dips on in SMH. LRCX would be one of them. It's spendy though, M. If I'm looking at a spendy stock, not that I like to do this, but I do realize it's not going to be scalable for a lot of traders. So it's not broadly accessible in terms of the cost of the option. So traders will oftentimes turn them into multi-leg. They'll sell some premium to offset the cost. That's the main reason for it, right? Whenever you get into an option that's too expensive, turn it into a multi-leg, etc. All right. So that being said, I would look at any number of the uptrends in SMH. LRCX is a lower weighted stock, which is fine. It's no knock against it at all. But please remember that we have trends in NVIDIA, Taiwan Semi, ABGO, ASML, AMD, AMAT, and LRCX. So lots of choices. Wait for the dip and then engage. All right, gang. As always, thank you so much for being here for Charts and Coffee. We'll be back with the coffee, with the cream, and probably some salt tomorrow as well. Gang, this year is one of those years where we have a dovish pivot. We just want to take advantage of it. We really do. We've already been anticipating it. You look at the NASDAQ at all-time highs, you look at the S&P, we're already anticipating it. So it doesn't mean there's going to be tons more left in the tank. But when the Federal Reserve makes money cheaper, the trickle-down effect is pretty significant, right? It's hard to be a bear. Will there be pullbacks? Of course. But as long as there are pullbacks within the context of the trend and above the 200, my gosh, let's focus on the long side rather than trying to pick a top. Yeah? All right, gang. Be good to each other. I'll see you tomorrow.